Well, Gian P. Zini has practiced law for over 20 years, based out of Milan, London, and New York, in the areas of international capital markets and securities law, banking, corporate and structured finance, and mergers and acquisitions. He relocated to Utah in 2006 and has focused his studies and professional practice on the business and transactional aspects of national and international expansion, distribution strategies, corporate governance, performance management, and organizational behavior, as well as sustainability corporate strategies. Throughout his professional career, Zini has been committed to academia, teaching in the Department of Communications, Economics, and Information at the University of Modena and Reggio Emilia in Italy, in the Department of Finance at the University of Utah's David Eccles School of Business, and in the College of Social and Behavioral Sciences, and in the Bill and Viv Gore School of Business at Westminster College in Salt Lake City. A frequent speaker at conferences and seminars in both academic and professional environments. He is co-author and author of numerous writings for business, financial, and legal publications, including most recently the United Nations System and other international organizations and agencies, what role do they serve in a time of economic and financial crisis in global Utah, as well as cross-border mergers fever, Utah's international growth and business legislation, and international comparative analysis of HB 29 business entity mergers. Zini cooperates on a pro bono basis with local, national, and international organizations and trade economic development agencies. We first met at what the Center for the Study of Europe here at BYU coordinates with the Governor's Office of Economic Development, an exciting two-day event called Utah Europe Days, where he was a featured participant of that conference. And from that time on, Professor Wade Jacoby, who directs the center, said we need to be more connected and learn more about the very interesting work that Gian is doing. As we were discussing possible lectures, I think there were 7 or 8 different possible titles that we explored, and all of them sounded very interesting. This was a topic that we have not heard and we thought sounded particularly useful and interesting, particularly with the debate, or maybe the lack of debate, that's been going on lately about climate change. Today's lecture is titled Cap and Trade, Structural, Financial, and Legal Technicalities and Operational Practices of Global Carbon Markets. Please join me in welcoming to the Kennedy Center, Gian P. Zini.
Thank you very much, Corey, for having me today. Thank you all for coming. Let me just take care of the technicalities and works perfectly. Thank you. Thank you very much. Well, first of all, my name is easy. Gian P. Zini, in realtà, is John. Call me John whenever you want to interrupt me or ask me questions. Thank you again for inviting me here. When I told my wife that I had been invited to give a presentation today, the tough New Yorker she is, she immediately asked me, a cap and trade presentation on Halloween? Really? Are you serious? Is this a joke? Well, I'm very serious about cap and trade. And by the end of this presentation, you may even think that I'm probably even too serious about it, or that it's a very serious subject, even more probably that we may have guessed. As to the second question, is this a joke? I have a very deep sense of trust, which has costed me dearly sometimes during my life, but I had not thought that Corey, the Kennedy Center, or the BYU would have tricked me this way. So, but I'm here, you're here, so this is not a joke, even if by the end of this presentation you may think that somebody on both sides of the aisle may joke when they speak about cap and trade. And we know that there are a lot of theories, and there are very strong feelings, one way or the other, about cap and trade and what a cap and trade is and what the cap and trade's purpose is, and if this purpose is achieved. I am not going to advocate for one position or the other. First of all, I'm confined by the very, very limited time to try to talk about a very complicated subject. I'm too respectful of your opinion to try to influence you. And likewise, I don't think that within 45 minutes, I could change your opinion. But at least I would like to come away from this presentation today with you, at least agreeing on something, that it's not as obvious as it is, or as it looks, or as we may have thought about it until now. Like I said, very strong feelings, not always supported by a detailed analysis. What I'm trying to do today is to provide you with some structural and operational technicalities. I'll try to dig much more into the subject. I'll try to give you more than the customary Cap and Trade 101 podcast. And we'll try to explore what both sides say about cap and trade and look at how it works and what it is. Because it's not just about protecting the environment or thinking of new taxes or new ways to do something about the environment. And in doing so, I will, trying to be as objective as possible, I will quote some of the most reliable sources that describe the phenomenon of cap and trade. Likewise, I will quote statements of some masters that have influenced me and have helped me in my cultural path throughout my years. What I'm trying to always encourage is to try to think, or at least gather information that may help us to develop an informed opinion. And what we have experienced about cap and trade is that there are a lot of words that are being exchanged. Many people have assumed sometimes a stereotype position and have refused to confront themselves or admit that both sides are struggling with some of the reality that comes to talk to cap and trade. There is this wonderful statement in Latin, and every time, being Italian, having born in Italy and raised in Italy, always whenever I can, I try to use some Latin. Digo ego, tu dicis, ed eneque dixit et ille dictatque postoties, nil nisi dicta vides. Meaning, so many people are talking. You say something, I say something, they say it. By the end, we just kind of conform ourselves to the consensus. And sometimes we just take the position that we want because it fits with our framework of ideas. But sometimes we don't do that extra step. And also we see here that when we talk about cap and trade, there are a lot of forecasts, either positives or negative, that characterize the description of cap and trade or an evaluation in cap and trade. And Galbraith has always been a very pleasant reading for me, and he wrote in The Short History of Financial Euphoria, the only function of economic forecasting is to make astrology look respectable. And particularly this time and age, with what we are experiencing with the time of financial crisis, and how the financial crisis has been originated, this economic forecasting exercise has probably been a little deficient, or at least fallen way shorter than we thought. I would like, before getting into the technicalities, to start from an assumption that I think, no matter what our opinion is, no matter what our political position is, I think we can all share. In other words, that we, I hope, all agree that we want to protect the environment in which we live for a number of reasons. First reason of good citizenship. We live in a word, we don't want to harm the world, the environment, or people. Maybe for religious reasons, we have been given a gift. It's the world, it's the environment, it's the life. We can't waste it. We can't ruin it. And if these two reasons are not sufficiently appealing us, there's one basic one. It's the law. The law prohibits to pollute beyond a given level. The law prohibits to harm people and the environment. The law prohibits an illegal disposal of waste. You have to comply with the law. It's as simple as that. If you don't, well, violation will trigger some sanctions that could be fines, damage compensations, or even criminal sanction. So we have one way or the other, to one extent or the other, we have to protect the environment. How do we do that? How we feel about that? That's a different question. Also, I think in order to understand correctly cap and trade and how it works, and before getting into the structural technicalities of cap and trade, I think that we have to understand the context in which cap and trade as a possible solution has been positioned. And substantially, we talk about sustainability. In other words, the pursuit of a balanced economy. And sustainability has been, again, projected and perceived in various different ways. Some people have perceived it as an anti-development and anti-consumerism agenda, the enemy of profitability and corporate market logics. Possibly some has perceived sustainability as a threat to the competitive leadership of corporate America. And others have really pushed again on the social value surrounding the concept of sustainability. But the truth is that sustainability is the pursuit of balanced economic growth, or in other words, the research of financial resources and mechanisms necessary to pursue such objectives at national and international level. And to do so, we, particularly in consideration of the financial crisis of these last 4, 5, 6 years, we had to establish and identify new financial mechanisms of economic development for carrying out this idea of pursuing a growth which is in line with respecting and protecting the environment in which we live. And sustainability has also become, at corporate level, if we think of who has played a role in sustainability, has become sustainability a competitive factor, a major factor for corporations to grow. Everybody pretty much has to deal with sustainability in the corporate world, and there is an understanding that sustainability is here to stay. And in fact, when we look at the various reasons that sustain an approach, a different approach, even to the corporate world, we all agree, or at least the majority agrees, that this is important for the future, and we have various reasons to do that. So, some of us are really not thinking in corporate terms, but also corporations have been called to play a positive role and to advance sustainability strategies. Unfortunately, sustainability has become a buzz, has become some sort of a self-serving acceptance of a trend, an hypocrite, in some cases, subscription of a more general imperative to turn green. And we have seen use and abuse of these practices that have led us to identify what they are called greenwashing practices, unsubstantiated green claims, opportunistic eco-marketing. But apart from this, I think the majority of the corporate world has identified sustainability as the path of this decade. And there are serious means of implement sustainability by strengthening the role of business and industry, along with the discovery of a scientific and technological community, along with international cooperation to accelerate sustainable development through a global exchange, and the development of means of implementation, such as the generation of adequate financial resources, and the transfer of environmentally sound technology, and science and corporate practice and guidelines that indeed sustain this concept of a different approach to how we live our world today, individually at a corporate level. To a point that the corporate world has started linking environmental, social, and governance issues to company value, to a different approach to evaluating the company. And I'm saying this because, again, cap and trade, whatever the scope of cap and trade is, and we know that the scope of cap and trade is to limit emissions and to create a platform against climate change, there is a lot of finance, there is a lot of structure in cap and trade. Again, we'll see, we'll get to that. But we cannot ignore that there is another dimension here of sustainability and environmental social governance, individually and in those who play a role in the world we live today. Wall Street, we like it or not, or in other words, the financial markets, play a significant role, and we'll see even in more detail why they play a significant role in cap and trade. But the good thing is, at least, that they have started recognizing that environmental social governance, sustainability, corporate social responsibility play not only a role in the agenda of the corporate world, but also that are an important factor in valuing the company as such, in valuing our economy. We started from a position where the market value of the company was essentially based on the assets they own, or the net asset value, meaning assets minus whatever debt and liability they have. Further on, the famous Modigliani and Miller model of 1958, which stated that the market value of company depends primarily on investors' expectation of what the company will earn in the future, which kind of allowed the financial market to grow as much as they've grown in these last 10 years. Again, use and abuse, because some people have really claimed or projected expectation of future profits that were far from being realistic. But now we come to what we consider in this context of sustainability of environmental, social, governance issues and the impact on the financial world to a triple E return approach. In other words, the world recognizes that the company that builds capital with social, ecological, and financial value promises lower risk and higher returns over the long run. In other words, this is, in a way, the financial description of accepting this trend of sustainability in our world. And this has been going on and on and on, and maybe we don't see it every day unless we are part of this world. But this new concept of economics, of creating environmental capital, has grown significantly. And it's one of the triggering factors of cap and trade that we cannot ignore if you want to understand really cap and trade and how it works and why it's there. To a point that the various exchanges, the various international organizations and institutions have created some indexes, some ranking and rating systems to try to measure how corporations, public corporations in this case, do comply to the sustainability agenda. And we have seen a proliferation of indexes in various stock exchanges, and just to look at the Dow Jones, which is our domestic system, you see how many sustainability indexes have been created. Again, is this for real? Is this a joke? Do the companies that now are trying to get a good ranking here are really complying with the mission of environmental social governance, or are just trying to look like they're good? Because this seems to attract very high interest by the intermediaries, by the banking industry, and by investors. The notion is that the companies that score high with sustainability have proved to have a much higher market value when benchmarked with all the other companies. Most recently, we have seen also that the largest European capital market regulator has established carbon strategy indexes, two in Australia, one in Europe, one in Japan, and now there is kind of a race that has started, and recently, in mid-February, also the Bombay Stock Exchange in Mumbai, India, launched the country's first carbon and efficient life index. Why am I saying so? Again, it's not just about saving the environment. Cap and trade is a significant market that functions in a way that goes way beyond our inspiration and imperative to save the environment. And this new trend in the financial market, in the corporate world, is there to communicate to the investors and basically to get money to have a preferential treatment, to receive higher attention by those that invest and intermediate the money. Explaining how each company, how their own company, is trying to really pursue an environmental social governance strategy. And showing why a sustainability investment, an investment in that company, is a good investment. Not only. Many companies, many companies, true or false, they are saying that their product is sustainable and have established some marketing strategies to really reach out to the consumer, and have identified sustainability as a marketing vehicle. I sell more because I say that my product is sustainable, my product is green, and my company really provides an answer to the needs that Americans have about a sustainable life, about pursuing sustainability issues. And the companies try to appeal to the so-called green consumer and try to sell much more product. Problem is, when we look really a little bit more in depth about this green marketing, about green consumers, that not all of us really understand exactly excuse me, where to find a green product, or what is a green product, what is a sustainable company, and what isn't. Lack of knowledge. Do we know? How can we understand? But there is a lack of knowledge here, of full understanding, that we'll see also when we go to cap and trade. Lack of full understanding of what it is. The theory is good, we love it, but is it real? Is it a joke? Now, I don't know if, well, sure, most of you shop online. I don't know if any of you has focused on the retail industry before and the parents of the retail industry, or if any of you has simply turned on his computer and shop on Earth Day and try to take advantage of these Earth Day promotions that every online retailer offers to his customers. If you look at each online retailer website, a month before Earth Day, okay, you'll have some green products, some normal products. If you look at it, on Earth Day, on the week of the promotion, of the Earth Day promotion, you'll see that the number of green products increases exponentially. Products that were not and could not be defined as sustainable products, as green products, all of a sudden are green. Now, is this real? Or is it a joke? Or do we simply have an opportunistic eco-marketing that transforms normal companies, normal products, into something that would appeal to a consumer that believes in the value of the Earth Day? Now, but fortunately, not only corporations are players in this sustainability decade that we are living, and we assume that one, and it is true, that one of the major players, in other words, of the major financial resources provided that contribute to advance environmental conservation, sustainability, economic development, community development, is the public sector. Where are the resources coming from? The Office of Management and Budget Executive Office of the President has identified these financial sources for 2011 as to 57% from taxes and 43% from debt. Now we have various scenarios here, right? Just to describe both sides. Let's cut the debt. What do we do? If that 43% disappears or it's substantially reduced, let's cut taxes. What happens? Let's cut both. Yay, great, isn't that the best recipe? How do we do it? What happens if all of a sudden we don't have the resources we have had until last year? Is the European recipe to increase taxes, cut welfare, lower debt, butcher their own people, the best way to get out of this mess? I was listening to the news driving here to Provo, and I heard that today the European Commission has published the unemployment rate for Europe, generally for the European Union, is now 11.6%. Some countries like Spain and Greece, unemployment rate is 25%. There are statistics out saying that 50% of Spanish youth is unemployed, not underemployed, unemployed. This is really, for a European, it's a very sad thing. But again, we have not only the government, but we also have a number of international agencies and organizations that play a role and have played a role in pursuing sustainability. But again, I don't need to tell you that this time and age is tough for everybody, that the financial crisis started with the collapse of the market of collateralized debt obligations backed by the subprime mortgage, froze the debt market, and this caused a big recession that we are still trying to come out. And so the world has focused in trying to find innovative financial mechanism. In other words, failing because of the recession, contributions by the corporate world to advance in sustainability, failing financial resources to be provided by the public sector. The scope was to find other ways to get this done. And creative minds have identified a lot of other ways to try to keep pursuing the environmental social governance, the sustainability scenario that we have described and to which more or less all agree to. And one of this is carbon finance. One of this is cap and trade, plus a lot of other financial instruments that I will spare you, because you've come here to hear about cap and trade, not about finance, right? But the point I'm making is that even if the common perception is that cap and trade has been established essentially as a platform to cap emission, to do something good for the environment, to deal with industrial operations and the pollution and the emissions and whatever, there is also another side, which is a constituent element of what we are trying to look at here now. And it's the fact that we are trying to procure financial resources to continue the environmental agenda. And this is it. Is it simple? Doesn't look that simple to me, even if I've been studying it and working on it for many, many years. Okay, cap and trade, yes or no? There are many reasons for which we can support cap and trade. And there are many reasons which tend to support a negative approach to cap and trade. But somebody says that he's in favor because it gets the job done, it's simple, it's fair, it's progressive, and it's market-based. In other words, it's based on the financial markets. So if it's market-based, financial markets are always right? So we can trust them. What else? It's tested and proven. It's cost-effective. It's economically sound. It's a prudent long-term investment. Most importantly, the cap is the only policy guarantee, the only policy measure that can achieve the purpose to cap emissions. On the other hand, it's considered a tax. It's considered a significant cost for the for the American economy, let's say, an inflation triggering factor, something that would substantially increase the price of everything: food, furniture, clothes, electricities and natural gas, utility, property taxes. Somebody projects that with cap and trade, none of this will happen, that we will actually achieve not only the environmental scope of cap and trade, but the economy will also benefit from it. Other believes that it will cause a significant problem for corporate America, for the US economy. It will trigger job losses, US household purchasing power decrease, and so on and so forth. So, what's true? Also, what is the position of the American people to cap and trade? Do we know a lot about cap and trade? Well, there are a lot of researches here, and a lot provide for conflicting results. Now, in the past, majority of Americans seem to give precedence to environment over economy. In these last few years, this has turned, and most recently, Gallup has asked Americans again about the trade-off between environmental protection and economic growth, and probably unsurprisingly, economic concerns have come up as something that is a more stringent problem. Now, another poll suggests that only 30% of Americans support cap and trade. Many Americans have heard a lot about cap and trade, but even more don't know exactly how it works. There is also concern that this cap and trade, rather than helping each one of us, rather than really helping the environment, may benefit bankers and traders in Wall Street and London. Carbon market has been defined as one of the fastest growing markets ever, with volumes comparable to credit derivatives inside of a decade. Europe will be the center of the global market as a result of taking the lead. London is the leading center, and will remain so for years to come. Very recently, there has been a poll by the Wall Street Journal, and it came up that 70% basically of the readers, basically of Wall Street Journal readers, supports either a carbon tax or cap and trade. 70%. Who are the readers of Wall Street Journal, I asking myself, but I'm one, but I don't know. There is, again, a big financial and banking component. Other polls, again, give kind of a complex fragmentation about who's in favor and who's not, how you can define who's in favor and who's not. Again, little awareness comes out, possibly modest support here now. Kind of a confusion between favoring carbon emission and favoring cap and trade. But the truth is that cap and trade is there. Cap and trade is a huge, huge financial market that has grown significantly, beginning with 2006, and the European emission trading schemes, which is actually the first and still the most significant cap and trade market in the world, was established in 2006. Already in 2005, I'm sorry. Already in 2006, the value of cap and trade transactions amounted to $64 billion. It's a lot of money there, okay? It's a lot of money. The value of cap and trade in 2009 amounted to 103 billion euros. We keep growing and growing and growing and growing. In terms of volumes of emissions, in terms of value of the transactions, the global carbon market has grown 80% in 2007, 83% in 2008. 2008, it a trading volume of about 125 billion. Now, you can imagine that when we talk about these big numbers, it's not just about capping emission. There's somebody there that trades, that intermediates, that banks, that invests. So this piece of the puzzle that I'm describing to you, for which I'm calling your attention, cannot be ignored when we think of cap and trade. We can define cap and trade schemes as mandatory, like in Europe and Australia, where there are laws that define caps and mandate companies accordingly to trade on allowances, and voluntary markets. In other words, areas like here in the United States, in some areas of the United States, the majority of the United States, where there is not a mandatory cap and trade system, but still companies do voluntarily trade in allowances and in offsets. And the Chicago Climate Exchange is the marketplace for this voluntary market in the United States. And in 2009, it reached already a significant amount. Now, there is another factor that needs to be considered, which is the price of these allowances, and I'll get a little bit to the operational structure in a little bit. Now, the volume has continued to grow, not surprisingly. More and more companies are subject to this system of allowances. The price is another factor. You'd imagine the very basic rule that the more allowances are there on the market, the higher the supply is, well, the price has to go down, more or less. And this is what happened. So is it always a cost increase? Or right now, the cost of the same allowance that I paid X in 2007, in 2008, what's the price now? It's certainly X minus Y. There has been a significant reduction in price because the market has grown in volume and in value, but the price per unit, the price per allowance, which represents generally 1 ton of carbon emission, has fallen. Now, another thing that I haven't told you so far is that, okay, what is it? What is it that we trade on cap and trade? What is it? Okay, we know we trade credits, and I'll get into some more specific real quick, that represents offsets and allowances. But where do we trade them? We put them on the market, and we trade them like stocks. So are they financial instruments? They are defined on the other end as commodity. They are defined as commodities, so they are dealt exactly like coal, like oil, like copper, like corn, like wheat, like many other commodities. And the price has gone up and down, if you look at this graph, in a way which is extremely consistent with the trend of commodity financial markets. Why? Why? Why does the price go down when the price of coal, when the price of oil goes down? So is the price of cap and trade triggered exclusively by the system of cap and trade, or is triggered, manipulated by other market factors? Again, are we dealing exclusively about capping the environment, saving the environment, or is there something else there? Now, I think I have to go much faster. All right, how does it work and what it is? We are trading allowances. In other words, we are given allowances up to the number of emissions that we are permitted to do in Europe. Progressively, these emissions go down throughout the years. We either, by we, I refer to the companies that are subject to cap and trade, they either comply with the cap or they don't. If they comply, they can meet just their cap, or they can do even better than that. If they do better than that, they spare some allowances, and they have two decisions available to them. They can either keep them for the future. I don't think that I can always meet my cap in the years to come, so I save my allowances for the future. Or I can decide to trade them, sell them at a value, which is what the market pretty much defines as the trading price. On the other end, if I don't comply, I need to buy some allowances to bring me down. Or I need to buy some instrument that represents the credit of an offset, of a project that has contributed significant value to the environment under the systems defined either by that specific cap and trade regulations or by the Kyoto Protocol, and I'll get to that. So we are basically telling people that if they don't meet their cap, they can pay to get in line. We are also leaving an option to the corporations to decide what's the best way for them economically. In other words, what's the cost of improving their system, of reducing their disposal? The cost of adaptation, as it's called in the technical terminology. If a company thinks that the cost of adaptation is $10 per ton, and they can buy, I'm just making a mere example, they can buy an allowance per 8, they can decide to comply and pay 10, or they can say, you know what, I want to save 2, and I buy the allowance. So in other words, it can be seen also as a system that allows company to defer compliance with whatever applicable regulations that cap the emission, that regulates environment in their jurisdiction, and move on. Also, these emissions will go down, so they say progressively. They will have been reduced by 2020 of 21% in the European trading system, as from when they started in 2005. But also, they will increase the number of emissions, the number of gases for which emissions will be capped, with an increasing volume of emissions that go on the market. Initially, these emissions, these allowances have been given for free. Beginning 2013, they won't be for free any longer. There will be an auction system. In other words, each company, based on each state, the member state of the European Union, and the 27 member states of the European Union, and 30 states that really have signed off on the European trading schemes, meaning also Iceland, Liechtenstein, and Norway, that are not members of the European Union, participate to the European trading scheme. Also, there's another thing they're saying. Some industries could suffer a competition from other countries where cap and trade is not established. It's called carbon leakage. In other words, they could move. So there are some ways to really make this thing easier for these companies that could find carbon leakage an interesting proposition from a business standpoint. Also, the Californian system that mandates a fairly severe cap and emission cap system on the companies in California have some sort of leakage. They are going to make exceptions for companies that are saying, you know what, we may leave the state of California because this is too hard for us. We can just move to Utah, all right? And they're going to make an exception. This company, they're going to whine and claim that they're going to leave. They'll be exempted. So why do companies need to have a different regulation? So that's another technical problem that we have. I said that it's not only by trading allowances that you can satisfy the cap, but it's also by buying a financial instrument, a credit called, that represents the value for the environment of a project that is going to be financed by corporations. They need, in fact, to meet the fact that to offset the fact that they haven't met their allowances, they haven't met their cap. And this system has been established essentially to favor the developing countries. The majority, who dominates the cells, who gets this money is essentially China, India, Brazil, and other countries, while those who buy are essentially European in the system, European countries. And that's how the system works, plus what we have here in the United States. Obviously, as you know, the cap and trade federal system didn't pass. There are some regional systems that are voluntary, other mandatory. There was an initiative here in the Western United States, Western Climate Initiative, of which Utah was a party. And in November of 2011, 7 states, including Utah, have left the system. And the only state now is California, along with 4 Canadian provinces, plus some other cooperations with other international partners that are working together with the environmental protection agencies of the United States. Problems? Yeah, there are some problems. It's a financial market, so there is an issue of integrity and oversight. Obviously, we have to see that volume, liquidity, pricing, banking characteristic, tradings, performance, the substance of what we buy is really there. And also we have to think, what's the accounting correct regulation? Are there any taxes on the transactions? The fact that it's qualified as a commodity as opposed to a financial instrument like a stock, like a bond, like an obligation, creates some differences, and VAT is applicable, and there have been some problems about that. So what's the solution? There was a seminar a couple of years ago at the School of Law of the University of Utah about what's the way to deal with pollution. And the subject there was criminal prosecution of an environmental violation, the right approach. But the truth is that we really need to focus on all the laws that do apply to environment and how we deal with environment. And if we don't coordinate all the various legislations that applies to cap and trade, environment, pollution, or caps, we risk to find ourselves in a very confused and complicated scenario, which is essentially what we are experiencing. In other words, should I comply with the cap and trade system, but I'm still in violation of a piece of legislation that can even result into a fine or to a criminal sanction? What do? I pay for the cap and trade, but I'm still subject to a criminal violation. So I'm not advocating one or the other, but there is a lack of coordination of all the rules that apply to cap and trade that needs to work in a coordinated fashion and need to work very well. And we are not there yet. So it's not that simple. Thank you.